Hello, Elias from Novice Investing here. Wanted to quickly discuss the SEC's announcement yesterday, November 2nd, that increases the offering and investor limits for equity crowdfunding. So there are three different categories that I want to talk about, which are the Regulation A offering limit increases, the Regulation CF offering limit increases, and finally the Regulation CF investor limit increases. So let's go down the list. First, companies that are offering securities via Regulation A are now allowed to raise up to 75 million. This is up from 50 million. Now, I'm not familiar with any company that has raised even close to 50 million. The company that I'm familiar with that's the most funded right now is Nightscope. Not saying that this is the most funded, but it's the most funded I'm aware of. And they've raised almost $28 million via Regulation A. So I like this increase to 75 million from the SEC. It's paving the way for future companies' rapid growth. The next is they're raising the maximum offering for secondary sales under Tier 2 of Regulation A from $15 million to $22.5 million. Now, what does this mean? It means that if you are an existing shareholder and you are looking to liquidate your position as part of an offering, that has been increased from 15 million to 22.5 million. So that's good as well. Let's talk about the Regulation CF amendments here. Let me move my notes. Yes. So for offerings, let's talk about offerings first. So the maximum amount that a company is allowed to raise for Regulation CF is moving from 1.07 to 5 million. So this means they're able to raise almost 5 times as much as they do currently. Now, I checked Start Engine, and they had at least 39 companies listed on their completed campaigns filter that maxed out at 107 million. Maybe we can take a look. I'll just take a look here. So scroll down to Reg CF. So here you can start seeing these Regulation CF companies. You have, solar panel companies. You have financial companies. At least 39 that have hit this maximum raise of 1.07, which usually indicates that the demand for those securities was higher than the amount the company was legally able to raise. So now that we've increased the limit to 5 million, it'll be exciting to see what we can do as the equity crowdfunding community. Are we going to go up to 5 million? Are we going to see a lot more 5 millions, or maybe somewhere in the middle? I'm excited to see. Okay, let's take a look at the last change, which is a little bit more convoluted, I'd say, which is the investment limits for investors in regulation crowdfunding offerings. So if you're a non-accredited investor, let's jump over to this chart here. And this chart has the current limits, not the future limits. So this is a bit convoluted, so follow me here. If either of an investor's annual income or net worth is less than $107,000, then the investor's investment limit is the greater of $2,200 or 5% of the lesser of the investor's annual income or net worth. Okay, that's pretty wordy. But luckily they have a chart here. And maybe it helps if you put your mind into two buckets of non-accredited investor. Either your income or net worth is under $107,000, you'll be in bucket A, or your income and net worth are at least $107,000, and you'll be in bucket B here. So let's talk about bucket A. If you have an annual income of $30,000 and you have a net worth of $105,000, you can invest the greater of $2,200 or 5% of the lesser value of these two, which in this case, 5% of $30,000 is $1,500. So in this instance, the investor would be able to invest $2,200 in equity crowdfunding offerings over a rolling 12-month period. Remember, this is not a fiscal 12-month period. This doesn't reset in January. This is from the day you invest in Regulation CF. There's a rolling 12-month period to when this limit resets. So in this instance, the investor would they would be able to invest $2,200. Now, a similar scenario. The investor annual income is $150,000, but their net worth is $80,000. So it's under this $107,000 threshold. They can invest the greater of $2,200 or 5% of the lesser value, which in this case, out of $150,000 and $80,000, the lesser value is $80,000, and that would give them a limit of $4,000 in that rolling 12-month period. Now, in the future, starting 2021, instead of looking at 5% of the lesser value, investors will be able to look at 5% of the greater value. So it will now be 5% of the 105, which would put them at somewhere, what is that, 5250, or the greater of 5% of 150,000, which is what, 7500. Hopefully my math is not too far off there, but you get the point. You are going from looking at 5% of the lesser value to 5% of the greater value. Now, bucket 2. What if your income and net worth are at least $107,000? At that point, you can invest 10% of the lesser value of your annual income or net worth. So in this case, 150 and 107, you can invest 10% of the 107. Out of 200,000 and 900,000, you can invest 10% of the 200,000. Once again, starting 2021, investors will be able to look at 10% of the greater value rather than the lesser value. So this is pretty powerful. Now, it should be noted that there is a cap here. So across all equity crowdfunding investments for that 12-month period, investors are not able to invest more than $107,000. Now, who do you think this impacts the most? Who do you think this cap has been impacting the most? Oh, I can only invest $107,000. Yeah, if you said accredited investors, you're right. So people who already have a lot of money and a lot of wealth. I don't know about you, but I don't have $107,000 to invest in equity crowdfunding every year. Not yet, at least. So this brings us to the last discussion I wanted to have about the update, which is that accredited investors no longer have investment limits for Regulation CF. Now, there's kind of two sides to this. On one side, that means that there's a lot more potential for capital to flow into equity crowdfunding investments and offerings. There's a lot more room for people who have a lot of money to participate. On the other side, I'm slightly concerned with whether these high net worth individuals will start to crowd out the, everyday average Joe non-accredited investors. And if that is the case, and I hope it's not, it kind of goes against the spirit of equity crowdfunding, which is to democratize the opportunity to invest in small businesses and startups. So that's my take. Hope to hear more from you. Like, what do you think about this? Let me know in the comments below, and feel free to like and subscribe. And thanks for watching, and I will catch you soon. Thanks. Bye-bye.